I have a feeling, especially if you're in my Discord, you're gonna like this question from Kyle.
Hey, Brad. Love the show. Quick question regarding the poor man's covered call. Just curious what happens if I get assigned on the short end of the call and I don't have the funds in my account to cover it. Does it resolve automatically and they just take my leap option? Or what exactly happens in this instant? Am I going to have to eventually deposit the funds in my account to resolve the debit? Or what exactly happens? Thanks.
So a question I get very, very often. The potential outcomes of the leaps option and the poor man's covered call. What are things that can happen? We know as the buyer of the leaps, right? We have the right, not the obligation, to exercise an in the money option that has intrinsic value. So we kind of have the control. We don't have to worry about people exercising on us. We don't need to worry about being assigned. The only thing we need to worry about when we buy an option is where the hell is the share price, right? Are we in the money, out of the money, and how does everything look? It's that short call that we're using. So those that are unfamiliar to the poor man's covered call, you first buy an option, and it's frankly just a debit spread. You're going to buy an option, pay some premium, and hope the share price goes to the moon, goes to infinity. When we write calls in the wheel strategy, we need 100 shares of that particular stock to write the call. We need collateral. That collateral is 100 shares. Well, when we do this leaps option, we can use the options contract, not 100 shares, as the collateral to make this trade. So what the heck happens as the writer of the option, the seller, we can be exercised in the money. Now, first and foremost, there's a very super low chance, especially if you're not using a dividend stock, that you are going to be assigned early. Unless something crazy happens, you are not. Because we know as the buyer of an option, we never want to exercise early. And if you don't know why, I'll leave like a card. I don't know which side of me the card will be on, but I'll leave a video why you should never, ever exercise an option early. But what if it gets to expiration? Well, we're going to move past the fact that I'm almost never going to let my short call get to expiration. My job is to protect the leaps because that's where you want to make your money. Your goal long terms with this poor man's covered call is the leaps option. Your goal long term is to make sure that that leap option gains as much intrinsic value as possible, because as we approach expiration, extrinsic value, the other part of the value of the option, is going to go to zero. So we want to gain as much intrinsic value and then one day sell that option back to the market for a lot more value than what we purchased it for. That's like the goal. But let's say something crazy happened. It goes in the money. The buyer of that option is a dumbo and they exercise on you early. What are the potential outcomes? Well, to be honest, it depends on your brokerage. I cannot speak for every brokerage, but I do know that every single brokerage has in their terms and conditions, and if you search on their website what will happen in this outcome, you're going to want to look at spreads, right? You might not be able to type into your brokerage what happens when my poor man's covered call gets assigned, right? Because that's a slang term. But if you're going to go to debit spreads, what happens when my short call gets assigned? Here's the things that I've experienced and heard, okay? If it is at expiration of the short call, meaning it was supposed to expire on Friday, it expired Friday in the money, and now it's going to be automatically exercised by the broker. Please don't let that happen. When you get assigned on your short call, make sure it's like a fluke occurrence. Like you're like, damn it, why are they exercising on me early? Make sure that if it ever happens, that's the reason why, okay? Because you're going to want to roll sometimes at a loss, close that, move it out, protect your leaps option. When it happens on expiration day, from my experience, and this is with the basic brokerages, okay, the apps that we're using and we all love, and even some of the bigger ones, you are going to be assigned on that option. The broker, the brokerage, Robinhood, Webull, Vanguard, they are going to automatically exercise your leaps option. Now, when we say exercise, we don't mean sell to close. So if the value of your option is soaring and you're up 3,000%, that's why this is a terrible thing for you, because you're going to lose that 3,000%, right? You are going to buy 100 shares at that strike price. But then you're never going to get to hold those 100 shares because they're going to go right to fulfilling the collateral of selling those 100 shares back from your short call. Okay. That's all going to happen automatically. And then your profit or your loss is going to be the difference in your strike prices times 100 minus the premium that you paid for the leaps plus any premium that you collected from the short call, which is why, just as a general rule of thumb, if you never want to, quote, lose on a poor man's covered call, make sure that your short call, the difference between your strikes of your short call and your long call, times 100 is greater than the premium that you paid for your leaps. So that's at expiration. Now, let's say it's this freak occurrence where it happens on a Wednesday. And you're like, damn it. From my experience with the brokerages that I've seen and heard from people, this personally has never happened to me. So this is all hearsay. What's going to happen is one of really two things. Your brokerage is going to do the same thing that as if it was expiration. It's going to automatically exercise to get those 100 shares from the person that got that option that you sold to or bought it from. And then they're going to use that. And that's going to be the end of the day. Same profit outcome as if it's expiration. Another thing that happens, especially with the more reputable, older, bigger brokerages, is you will get a notification that you've been assigned on your short call. You have the option to buy 100 shares at that time to satisfy that, or they will give you maybe one day, maybe two, to sell to close and then buy 100 shares so you don't lose any profit or loss that you have. So if you get to expiration, and this is pretty much the long and short of it, if your short call gets assigned, the brokerage is either going to automatically exercise your leaps option, you're going to lose any profit due to new intrinsic value, or they're going to tell you you can buy shares, 100 of them, to satisfy your short call that just got called away from you, or they'll give you a day or two to sell to close your leaps option to use that money to buy the 100 shares. Guys, if you, like I said, you want to see a video about the poor man's covered call, I'll leave it right here, and that's it.